Yours?
Dr. Kohn, let's try to have a focused answer to try to answer something related to exactly what we're dealing right now. You emphasized in your testimony the importance of interest on reserve balances as a tool in monetary policy. So for the committee, and all of you talked about this, I'm going to try to distill it down for us. Why is this authority necessary to retain in order to maintain a strong economy? And what are the risks if we repeal it? How would you summarize that quickly for us?
So I think there are a couple things there. One, Senator Peters, one is when the economy is very weak and the Fed reduces its interest rates to zero, as Brian was just talking about, then and the economy remains weak, or they're concerned that the economy will remain weak. This is 20-teens. You need to do something else to stimulate spending. You need to lower mortgage rates to get people to buy houses, to get lower interest rates to get people to buy cars, et cetera. And that's what QE does. That's what buying the securities does. Once the Fed has bought so buying those securities helps stabilize the economy and promote employment. Once the Fed does that, it really needs the interest on reserves then to tighten policy to fight inflation, as it did in 2022. It was a bit late to that game, I agree, and I've made that criticism publicly, but it did fight, and it did it with IORB. Without IORB, it wouldn't have been able to stabilize the system when COVID hit, which is a big difference there, a lot of COVID distortions, and it wouldn't have been able to fight inflation, and it's brought it from 6 down to 3 without IORB. So very important for stabilizing the economy and fighting inflation.
So you made the argument why it's important. I'd like to turn to the idea that we've heard that banks are receiving a windfall as a result of this. How would you respond to that, to those who would argue that?
So banks have to get those reserves somehow. The Fed goes out and it buys securities from someone holding Treasury securities. That person then takes the deposit and puts it in the bank. That person isn't going to deposit it at 0.5 interest rate, right? It's going to want a rate that's somewhat comparable to the securities it sold to the Fed. So, and then the bank then has the deposit at the Federal Reserve. So the bank has attracted a deposit that pays almost what it's being paid at the Federal Reserve. You can't compare the money that the Fed pays to the banks to net interest margin. You have to talk about what the banks have paid to get that money. And my view is they're paying something comparable to IORB in order to get that money. So the net to the banks, the net profit to the banks is quite small.
In fact, those remittances are back to the Treasury, which I mentioned in my opening comments. I also mentioned that the Fed is asserting that it's going to return to positive remittances back to the Treasury in the near future. Would you agree with that? And explain to us what that means for the taxpayers.
So I think the Fed's recent balance sheet, weekly balance sheet, suggests that it is already earning profits. The amount of accumulated losses that it's showing is started to go down very slowly. And as interest rates go down, and they went down further yesterday with the FOMC's decision, the Fed's profits will pick up. So the Fed is already on a path to recoup the losses that it made and start putting money back to the Federal Reserve.
And a final point, my time is running out. So to the average person, if you're a small business or a family and you're hearing this debate about interest on these reserve balances, how does it impact them? Why is it a good thing that this law is in place? And are there concerns that you have?
So I think it's a good thing because it helps. This goes back to the first question, Senator Peters. It goes back to what it enables the Fed to do. It enables the Fed to protect economic stability and financial stability. And without that, the recession in 2008 would have been much worse. The recession after COVID hit and the disruption in financial markets, the financial markets weren't working. And when they're not working, you can't get credit to households and businesses, small businesses or large, households, et cetera. The Fed had to step in and buy those securities in order to restore functioning. IORB enabled it to do that, knowing that when it was time to fight inflation, they still had the tool to fight inflation. Without IORB, inflation might be higher, the economy might be weaker, the stagflation could be worse.
Thank you. Thank you, Mr. Chairman.